Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. My name is Al Gordon, and as always, we're working on your financial freedom. What if I told you that it is extremely possible to retire yourself at the age of 33? And you're thinking, dude, really? Do you know what my life is like? Do you know what my responsibilities are? Do you know what I've got going on in my world? I get it, man. I've been there. I've done that. But think about it. Think about the possibility. Think about the possibility of walking away from corporate America at the ripe old age of 33. Yeah, you're thinking about it. I know you are. And some of you that aren't the age of 33, you're thinking, man, there's opportunity. And some of you that are above 33, you're going, man, that ship has sailed. Well, cool your jets for a minute, because my guest today is a phenomenal real estate investor. He is exceptional at what he does. And he joined Lifestyles Unlimited back in 2010. We're going back almost 11 years when he decided to come to Lifestyles Unlimited to learn how to invest correctly in real estate. And this young man at the time listened to everything that he was taught. And then he put everything he was taught into practice. Now, he didn't retire himself overnight. It took him a little bit of time. But he was able to put together an incredible portfolio of real estate assets that not only got him to a place of retirement at the ripe old age of 33, it also springboarded him to living the lifestyle that he has today. And I will tell you this. The information that Kirby and I talk about today is important to you, because I'm going to let you in on a little secret about Kirby. Kirby is a recovering financial planner. Yeah, that's right. He's been on the dark side, so to speak. And Kirby will tell you, if you just want to hand your money over to somebody and put your money on cruise control and let them do what they're going to do with it and give you whatever returns they can create for you, a financial planner is a great person to work with because he's been in that realm. But he will also tell you in the same breath, if you want to accomplish the same things that he has accomplished, you're going to have to take action. You're going to have to do a little bit of heavy lifting. You're going to have to get an education. And more importantly, you're going to take the bull by the horns and you're going to drive your destiny. So I'm going to welcome Kirby onto the show. Kirby, how are you today?
I'm doing very good. Thank you, Al.
It's a pleasure to have you on the show because I really love it when I have the opportunity to talk to younger people like you. Now, okay, let's be clear here. I've got about 20 years on you. But in the same breath, I'll also tell you that you have surpassed me when it comes to real estate investing. Not only because you got started a little bit before I did, but because you put the pedal to the metal and you made a difference in your life. So, Kirby, let's get to know you a little bit. Tell us a little bit about what you were doing way back, probably in college, and what caused you to get involved with financial planning and then adjust your trajectory into real estate investing.
Sure. It's a very good question. I started investing in real estate before I really knew what I was doing. And I bought a house when I was just 20 years old. And I bought it at a discount because it was a distressed sale, and I realized the power of real estate. And so that was always kind of in my back of my mind, like, wow, I bought this $110,000 house for $82,000, and I increased my net worth by $38,000 by buying a house. And I lived in it for a couple of years, and then later sold it. But then when I was getting into my career as being a financial advisor, there was one year I made quite a bit of money and my income dropped. And I decided that I needed to do something, right? And so I started researching, the different ways of investing in wealth and mindset. And I came down to two solutions, which was, one, I could make more money somehow, or two, I had to cut my expenses. And I thought, well, I can cut my expenses, but I don't really want to. I'd much rather find a way to make more money, because there's no cap on how much money you can make. But you cannot cut your expenses below zero. No matter how hard you try, you can't do it. And even then, that is capped because you can't go below zero. So I focused on making more money. That's when I started looking for ways to invest in real estate, and I found Lifestyles Unlimited, and I joined the group, and that's kind of how I got started and why I started in Lifestyles.
So as you went through the Financial Freedom Seminar, that's for the folks in the audience that aren't aware of what that is our 16-hour comprehensive educational program where we teach you everything you need to know about single-family and multifamily investing. When you completed that training, what did it do for you? I mean, what was different about that 16-hour course versus what you were taught in college?
Quite a bit. It shifted my mindset from let's save up as much money as we can in our life in a 401k, IRA, in different investments, to, accumulating a big pile of money and hoping that, I can have that pile of money last long enough for my retirement, right? It shifted my mindset to making passive income from real estate that I don't work for at any age, and build that up every year that I can by buying more real estate and buying bigger properties to eventually replace my earned income. And that's how I was able to retire. And so it really kind of connected the dots and shifted my thinking, for my future.
Yeah, I know the feeling. When we come back from the break, we're going to get into the meat and potatoes, so stick around.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. If you're just joining me, I have Kirby on the show today. Kirby's been a member of Lifestyles Unlimited for just shy of 11 years, and he joined at a very early age. So, Kirby, I got to ask the question. When everybody else was doing what everybody else was doing, why did you walk away from the herd mentality and change the direction of what you were doing and really get into the nitty-gritty of investing in real estate?
Well, it was quite simple. It was the logical thing to do. Speculating in the stock market and traditional mutual funds, ETFs, 401k IRA, it just wasn't working for me. And I knew long-term that over multi-decades that it was unlikely that it would work and be successful because it's really hard for humans to understand 30, 40, 50 years of asset accumulation and, drawdown, as financial advisors say. There's just too much risk in not meeting your goals. So that's why I stopped investing in the stock market and traditional investments and educated myself and decided to invest in real estate.
So tell me about that first asset that you purchased, not the one that, you got at the age of 20 that you lived in, but that first real Lifestyles deal that you did. Tell me about how that went down.
Sure. Well, I started joining Lifestyles. I started buying houses in multifamily passive investments. And so I assume you're asking about a house. I bought a house for literally 50 cents on the dollar. It was worth, better part of $100,000, $110,000. And it was for sale in a very distressed situation. Needed a quick closing. They needed money right away. And I bought it for, I think, $52,000. And so it was a bargain. Who would not buy that? Right. And it needs a little bit of work, repairs. And I got a contractor to do all the work because I was still working. I had a job. So I paid someone else to do the repairs on it, which was not that much, maybe $5,000 or so. And then I rented it out and started making, $400 or $500 a month on that house. So that was kind of the first acquisition and getting my first passive income every month. And I remember that first rent check I got. Wow, my resident or tenant has worked their full 40-hour-a-week job and given me literally a third or fourth of their paycheck. And I take part of it, pay the principal, the interest, the cost of the house, insurance, taxes, and the rest is mine to spend however I want. I thought that was so cool.
How much of your own money did you put into that deal? Do you even recall that?
It was zero because I bought it at such a discount. I used a hard money lender who lent me all the money to buy the house and the rehab money and the closing costs. So literally I bought the house, $0 out of pocket at the title company and did the rehab. And then about 6 or 9 months later, all I owed on it was about $60,000 or $65,000. But remember, the house is worth about $100,000. So actually, what I did is I went and got a new loan, and I refinanced, cashed out that house that I literally paid $0 out of my own money for, and I drew out $20,000, maybe $25,000, doing a refinance cash out, and then get a new loan on the property in the house. And I was able to then use those proceeds and buy more houses. And I bought my first passive investment in a multifamily property of a 126-unit apartment complex.
Yeah, I'm just sitting here trying to do the math on the returns, but simple math tells me if you started with no money out of your own pocket to do this real estate stuff, and you're getting returns on not putting any money into the real estate, you basically started with infinite returns. Am I tracking with you?
No, that's correct. And it's pretty amazing to think about. You bought a house with $0 out of pocket, which is not typical, but it does happen. And that was a number of years ago when prices were lower, but they are still out there. 9 months later, I pulled out $20,000, $25,000 out of the house, and I went and bought more real estate. And it's just the house has kind of multiplied, and then I started buying more and more apartments. And now I have 17 different multifamily properties that I invest in. I think it's about 2,500 units, maybe about 3,000 units that I don't work in. I just invest in only, and I receive that quarterly income or monthly income from those properties.
Did you just stop there? I mean, did you say, hey, you know what? I've got a couple of houses. I got like 17 passive deals. You were probably making more money at the age of 33 when you retired yourself than I was probably making at the age of 33 when I was serving in the Army. But I'm not bitter about that. I'm actually very happy about it. Did you stop there, or did you say, you know what? We're gonna double down?
Well, I said we're going to double down because very early on of joining Lifestyles and realizing the value of equity capture and the cash flow from buying houses and multifamily and getting money that I did not work for, I realized the value of it. And I decided that I would now become a lead investor. And so I started buying properties, investing in them myself, but also own and manage them. And I had other investors, other Lifestyles members invest with me so I could buy a bigger property than I could have bought on my own. And so now I have 5 of those properties that total about 698 units that I'm a lead investor on, and I make all the investment decisions and management of it on a daily basis.
So how difficult was it for you to make that transition from passive investor to lead investor?
It was really easy for me because I've been investing in houses and multifamily, and I've been networking and educating myself in Lifestyles and understanding business and real estate. So it's very easy for me to transition to the business of, how do you run an apartment complex and do it very well so that we have a very good return. And it's a very simple business, but there are a lot of apartment complexes that are poorly run, just because they use the owner may be in a different city and use a third-party management company, whereas I own and operate these, and I come on site, and all the on-site employees work for me, and I hold them accountable, and they don't deliver, results, then, we make a change, and I make sure that our asset is producing for all of us.
So the reality of it is you were trained correctly on how to build your business up. You went and did everything you were told to do, and you're now experiencing the fruits of all that labor. When we come back from the break, we're going to talk about multifamily investing. You're going to want to listen to what Kirby has to tell you. Stick around.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. All right, let me frame the picture for you out there. Kirby is my guest today. Now, Kirby is 20 years my junior, but when it comes to real estate investing, he has more than twice as much time on target. I know I'm getting in the military terms again, but he has more than twice as much experience time-wise as I have with real estate investing. More so, his portfolio is more, I'll just use the word impressive, than my portfolio. Now, there's a couple reasons for it. One of the reasons is that Kirby started a lot sooner than I did. I mean, he was exposed to what we do at Lifestyles Unlimited, and he came in, listened to what we had to say, made sense to him, and he went to work taking all that knowledge we gave him and made a difference in his life. Me, on the other hand, I was kind of, I was serving my country and doing what I had to do, and then when I retired, I had a financial catastrophe on my hands, and I had to get back into the workforce. So we are two very different people, Kirby and I, but here's the commonality. We both share a passion, a love, if you will, for investing in real estate because we understand what correctly investing in real estate can do for our lives. I mean, let me just make the case for Kirby. Age 33, he was done. He was done. He was done with corporate America. Me at the age of 33, man, I think 9/11 had just kind of kicked off, and my world went into the giant sucking sound because the global war on terrorism had begun, and the military was in play. So, just a difference in two paths. But I'll tell you what, I've made a brand new friend today in the form of Kirby, and I won't trade him for anything. So, Kirby, let's talk a little bit about multifamily investing. I mean, you've got more experience doing it than I do. So I'm going to ask you some questions that I would ask somebody maybe, I'm not saying you need to mentor me, but I'm going to ask you questions that a mentee might ask a mentor. Now, we kind of do this in Lifestyles Unlimited because we help each other out. So what was it like doing your first lead investment deal? I mean, it's completely different than passive investing. What did you have to do to prepare yourself for that first transaction?
Well, there was a lot of work that went into buying my first property. It was a 101-unit apartment complex. It was in bad repair. It was under bad management. Well, I was going to be the new property management company, and so I knew I could fix the management side of it. I had to bring in contractors to help make a huge amount of repairs to the property. When we did the repairs, the residents that were already living there were very happy with this, and we were able to, because they were so happy and the property was now better, we were able to charge higher rent and increase the income on the property, which makes the property more valuable. And then we also increased the total occupancy because it had a number of vacant apartments. And so we were able to increase the income on that as well. So there was quite a bit of work with real estate brokers, title company, my Life Stores mentors. I did use Lifestyles Realty to help me find my first apartment complex. And I had to hire 2 new employees, a property manager who works on site at the office at the property, and a full-time maintenance man who, again, works on the property, handles work orders. If something breaks, I don't go out there and fix it. It's my maintenance man who is paid by the property who goes out in the apartment or, the property and fixes whatever may need to be fixed. So there was quite a bit of work to, get there, but I did have a lot of help, with Lifestyles, mentors, and closing on the property.
So what was it about that particular deal that, made you dial into it? I mean, was it the returns? Was it the potential? Tell me about what just made your eyes go wide open and saying, that's it. That's the thing I've been looking for.
Sure. Mostly the management. A property management company can really determine how well a property runs, and if the property is not in good repair, if the leasing office phone is not answered, you're not going to get new residents coming in to lease from you. And so I knew I could fix all of those things and do the necessary repairs of the brand new roofs. There were so many roof leaks all over the property. It was embarrassing. In fact, one apartment had a 5-gallon bucket inside of their apartment, and anytime it would rain, water would not trickle in, but it would maybe flow into the apartment. And, the residents there were okay. I don't know if okay, but they tolerated it because the rent was so low. Well, when you put a brand new roof on it for, $250,000, there's no more roof leak. And so the residents were very happy, and obviously they agreed to pay more rent. So we made a number of improvements on it, and I knew I could fix the management of it. I liked the size because I was big enough property to have 2 full-time employees, 1 manager and 1 maintenance. And I liked the market because the other properties in the area were just poorly run, and the competition was poor. And so it'd be very easy for me to go in and make changes necessary to become a market leader and be successful.
How many passive investors did you bring into that deal?
It was around 30, I believe, 30 investors.
So you had 30 other Lifestyles Unlimited families who rallied around you and said, Kirby, we believe in you. We believe in your business plan. We believe in your background, and we believe in your ability to do what you say you're going to do. So what does that feel like to have that kind of responsibility on those shoulders?
It's a big responsibility. I think it's also a simple one because all you have to do is figure out what the problem is or why the property is not doing well, come up with a plan to fix it, implement that, and then the property will change. And if you explain that process to investors, they will understand it. I explained the roof. Another problem there was air conditioning. Every single air conditioner on the entire property was terrible. And by the way, the property pays for all the electricity and utilities on the property. It was an all bills paid property. And so we went in and replaced 100% of the air conditioners. And we did that because about 50% of the apartments had window air conditioning units running in addition to their central air conditioning. So basically half the apartments had 2 air conditioners. There was the one that was installed inside the apartment, but then there was window units hanging out of the windows running full time, all the time, dripping water everywhere because their main air conditioner was not working. So you're using 2 air conditioners pretty much 24/7, and the property was spending enormous amounts of money on utilities. And I knew I could fix that by fixing the air conditioners. So I explained that to everyone and showed photos of it and videos and, got bids on air conditioners and different size air conditioners for different floor plans and explained my plan and implemented it.
Wow, I'm picturing what you walked into. And, a lot of people would walk up to a property like that and, see the normal air conditioning systems kind of grounded or maybe up on the roofs and then see all these window air conditioning units running and dripping and think, oh, man, this thing ain't worth it. But you, Kirby, you knew it was worth it. When we come back from the break, we're going to get into the returns that Kirby was able to produce on that property. You're going to want to hear this.
We're back with the Lifestyles Unlimited Real Estate Investor Radio Show. We're here to answer your questions and help you become financially free.
Welcome back to the show. All right, so I promised you that we would talk about returns because you need to understand what it's like to invest with a guy like Kirby. Now, I was going to say something like, investing with Kirby instead of a financial planner, but as we discovered at the beginning of the show, Kirby is a recovering financial planner, so that joke doesn't work so well. But I think you need to understand that by investing into multifamily apartment communities as a passive investor, you can kind of have your cake and eat it too. Because what happens when you invest with somebody like Kirby, which is how I do the majority of my investing, by the way, is that you review the deal, you make sure the deal has the potential to meet your goals and objectives, and then you make arrangements to get into that deal. And then once you do that, you're pretty much done. Because a guy like Kirby, he takes over all the heavy lifting. So what you're expecting Kirby to do is to go out and do all those things that he said he was going to do to that apartment community to start increasing revenue streams, to start increasing cash flow, and to start producing returns on investment for yourself so that you yourself can get to that point of retirement in the next 5 years. So Kirby, you've got 5 deals as a lead investor. So you got 5 different apartment communities that you own and operate on behalf of the people that invest with you. So tell me about some of the rates of returns that you predicted for some of these apartment communities. And then if you care to, tell us how they've actually stood up to your projections.
Sure. So as a whole, our rates of return I've quoted on the low end as far as cash flow. My one property is as low as 4.5% to 5%. That one's a little bit lower because it's also a lot lower risk. It's more in the yield play perspective where, it's going to have very steady cash flow very quickly, but not necessarily a large capital gain, in the first couple of years. Other properties I have go up to about 7 to 8% cash flow. So if you invest $100,000, 7% would be $7,000 a year in cash flow that I would send you, or $8,000 a year, and that's typically paid quarterly is how I manage that. So you get about $2,000 per quarter, or if you break it out per month, about $700 a month on a $100,000 investment. Now that's just the cash flow. We also do refinance cash outs, which we can get into, which is how we, grow our net worth. And those are anywhere from a 50% to 100% gain on our original investment. So an average, if you add everything together, the cash flow, the principal pay down, the appreciation of the property, our rates of return average anywhere from 15% to 25% over multi-year periods on a particular property. So we're able to double our net worth or double our investment typically every 3 to 5 years. Wow.
I'm sitting here putting myself in the shoes of somebody who's investing with a financial planner, and I'm thinking, okay, well, that 7 to 8% cash flow, that's kind of keeping current with what my financial planner told me that I should be doing if I invest into mutual funds or whatever that financial planner tells me to do. But then you hit me with the most exciting information, which is your projection, your game plan is to double my money in the next 3 to 5 years. How can you possibly do that if my financial planner can't do that for me?
It's a good question, and it's in understanding that, we're not just buying a stock and hope that it goes up in value, or a mutual fund, ETF. We have direct ownership of real estate, and so we have multiple ways that we make money. One is the cash flow, which I told you about. I mentioned the appreciations. The property goes up in value when we raise the rents on existing leases, and we also can increase the value of our property by just leasing more apartments. So, if we buy a property at 85% occupancy, meaning that 15% of the apartments are sitting vacant, if we can lease half of those apartments of that 15%, we can move the property up to 92 or 93% occupancy, collect more income every month. And since the value of income-producing real estate is determined by how much income it collects, then our property goes up in value just by managing the property better. So we're able to force appreciation of a business or real estate, in this case, multifamily, real estate. We can increase our value of our property and get those capital gains and increase our total rate of return to get to those, 15 to 25% returns. And as long as I've been a Lifestyles member, whether I invest, with someone else in another property that they manage, or I invest in myself, if I buy a property and I manage it, those are the rates of returns that I've had for, 10, 11 years is 15 to 25% average per year. And it's just incredible how high the rates of return are on well-run real estate.
Yeah, I'd agree with you. I'm going to ask you a personal question. Are you okay with a personal question?
Sure.
Okay. What has your net worth done over time? I mean, you don't have to tell me exactly what your net worth is, but how has your net worth improved since you started doing all this stuff?
It's a little astounding for me to think about, even as a former or recovering, financial advisor, is that my net worth has grown 1,000%. 1,000%. And so what that means is basically you add a zero. So if you have $100,000, and you grow it by 1,000% over a long period of time, 9, 10, 11 years, you now have $1 million. Okay, $100,000 turns into $1 million. Not overnight, but over long periods of time. Whereas if you started with a $500,000, right, and you add a zero, you now have $5 million in total value. So that's the power of compounding your investments at very high rates of return, 15, 20, 25% per year, year after year. And I'm also reinvesting, my savings from my earnings and adding them as well. But in total, it's grown about 1,000%.
Yeah, my financial planner back in the day never used the nomenclatures that you just used on the radio. Yeah, we never talked about growing that wealth that same way. I mean, man, it's kind of weird to wrap your head around it. You could do the 40-year plan and maybe run out of money, or you can do what Kirby's done and be fine in about 5 years. So how long did it really take you to retire yourself, Kirby?
It took me about 6.5 to 7 years from when I joined Lifestyles while I was working, investing in real estate, both houses and apartments. It took me about 6.5 to 7 years to replace my paycheck. And I didn't have to wait to age 50 or 60 or 70. I was able to do that when I was financially able to do that. It's not age dependent. And that's how I was able to basically retire and leave corporate America at the age of 33 years old.
So when you walked away from corporate America, did you have a little tear in your eye?
A little bit, only because I had a number of friends in the industry and my coworkers, that I became close with. I realized I was leaving some friends behind, but at the same time, I was meeting and going to spend a lot more time with other new friends in the real estate world. So I was sad to lose the friends, but leaving the paycheck and the daily grind of, the 40, 60 hours a week, and the taxes and everything, and working for someone else and making someone else wealthy, I did not shed a tear on. I was very happy to leave.
Yeah, I know when I got to that point where, Lifestyles had done for me what it needed to do so that I could say, hey, I've effectively retired myself, and I walked away from working for a municipal government. I mean, I tell you what, I couldn't get out of there fast enough. I mean, it was like day and night for me. Hey, Kirby, we're at the end of the show, man, and I've got like a whole list of questions that I really wanted to get to, and we never got there because, we ran out of time. I want to tell you, thank you so much for being my guest on today's show. I know you helped other people understand that there's a better way to do this retirement thing, and it has nothing to do with what society has told you. You just got to do what Kirby did, what I did. You've got to get to a Lifestyles Unlimited free workshop, and you can find one at freeworkshoplivestream.com. And remember, it's not the money, it's the lifestyle.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.